Okay, I'm back. The screen should be on. We should be ready to go. And we'll see if we get some additional participants here in just a minute. Am I in this thing? There we go. Okay. Okay. Yep. Let me pause for just one more second. Like I said, we're going to go in just a second here, but I'm just making sure everything, I get a little paranoid with the new mechanisms. So I just want to make sure I don't have anyone in any other rooms. 1 second. Yeah, that's a good question. I did see that there were some people in a different one, but I thought it does send an announcement out. Let me just pop around and see if I see anyone in any other rooms. Otherwise, we're diving in. They don't want to jump in. That's okay. We're gonna go. Oh, it looks like Bob's in a different room. Yeah. Can't even tell what room I'm in. There we go. All right. Well, look, we're going. They'll catch up. Welcome out everybody to the Market Watch Group weekly market wrap. Bob, did it tell you that this was on? Were you in a different room and had to come to this one, or did it let you right in? Any feedback? Yes. Okay. But it did tell you that we were starting so that you knew to come. Okay. Fair enough. Fair enough. Uh, let's go. Yeah, let's go. Disclaimers, as always, be careful out there. Agenda. We're going to talk about today's market. Yeah, it was bullish. Bullish enough that we're like, yeah, bullish, or bullish enough like, ooh, this looks like it could be running out of steam. We'll take a look at our posture to see what kind of an impact this week will have. I don't think there's a lot of trades being carried over, but if there are, we'll talk about those. What to look for next week. Took several profits. Love it. Love it. And we'll review our trade list just to kind of see how things look. But I got to tell you, a little iffy. Trading plan progress. Okay. Before the afternoon is up, I am going to go in there. I'm going to post my mission statement, and I'm going to post the 2 weaknesses that I am currently trying to address with my own trading. If you want to do the same and start to help us dialogue that, we only have a couple more days. But if we can get some ongoing discussions about trading plans, that would be amazing. Because I promise you, you will appreciate the work that you put in to defining those trading plans in greater detail. All right, let's dive in. Let's dive in. Look at that market today. We're like, oh, the market's up 1.1%. Yes. Yes. Look at that volume first and foremost. Right? Now, here's the deal. None of this volume. This was the closest to being average, and it gapped down and then made a little bit of a comeback. Today, we're a little higher, but for what? Average is 72 million. We have 38 minutes left and we're at less than 40. Maybe 45 million? 50 at best. 45 to 50 million. What does that tell us about today's buying? That it's a bunch of buyers like smashing and grabbing their way in, or like, oh, this looks like it could run out of steam in fairly short order. And I'm leaning more towards the second. So yeah. That's my thought process. Okay. Okay. Let's talk about our posture first. Even though things are kind of in a weird place from a short term, the long term is fine. Here's what it looks like. And in fact, this looks like, if I was looking at the long term, I'd be thinking, ooh, is this thing trying to like stabilize somewhere through here, right? The bottom of the red line, that's a 1.25 trend line. The bottom of this, or the top of this, is more of a 1.5 right here, like that. So yeah, I mean, from a long term, this looks fine. No problem here. Nothing's going to change there. Short term, what's happened? Well, 1, 2, 3, 4, 5. So this week we're up. So you might be thinking, oh, Scott, that's a higher high, right? No, it's not. You might be thinking, Scott, it got back above the 50. We're going to score that positively, right? No, I'm not. I look at this as like, oh, it's taking a little bit of a pause. It's not a lower high, or else I'd score it down. I don't know. It looks like it could be a lower high sometime soon, though. And so that's where I am, is looking at this saying, whatever it is from last week is what it still is now. But from a narrative standpoint, where I'm thinking to myself, this is working its way down to potentially a corrective level, 10%, and we're only 5 here. Yeah, this is definitely, in my opinion, setting up the potential for some bearish speculation. Yeah, that's my thought. Whoops, that's the wrong button. Just make sure I don't see anybody in the Zoom room. Okay. I think we're ready to ditch Zoom. I think next week I'm just going to go straight to Discord and not worry about the double duty action. Okay, what's next? Volume, we said it's going to stay the same. And I'll tell you what, volume could have dropped. I'm at a minus. It could have been a minus 0.5. And it might do enough, just the fact that we didn't get anything else. If we see some buying volume drop off, in fact, you know what? Let's look at it. Let's just take a look. Buyers, nobody. Sellers, 1-to-1, nobody. Sellers, 2-to-1 for sellers. 3-to-1 for sellers. 4-to-1 for sellers. 5-to-1 for sellers. It's 5-to-1 for sellers. I don't know. I think the argument can easily be made to go to a 1/2 of a point. Even if we leave it, it stays as is. That's fine. Okay. Sector rotation. So sector rotation, I'm definitely showing some concerns. Where are you, sector rotation? I think we'll still hold up on a 0.25. Financials did well enough. Technology had a bit of a reemergence. Maybe that holds up. Maybe it doesn't go all the way to neutral. Major market? I don't know. I could see that drop to 1/4. That's the only thing so far, though. So it's kind of like, now what, right? Now what? Do we pop up a little from here and then drop again? VIX. How about the VIX? Let's go take a look at that. The VIX has been interesting for me. Ooh, okay. Now, looky, looky. I said we've got a long ways to come back down, but we seem to have done it. We're back under 15 now for implied volatility, right? Back under 15. Here is this is the spread that we put on that filled. It's making some money. It's a little to this right edge, but if you feel like the market's hitting some resistance and it might drop, then yeah, no problem here. Let me see. Okay. The uh the the situation with the date, we are now Friday. So what? Saturday, Sunday, Monday. You'll notice by the time we come back, now this thing's up at 215 bucks and it's in a pretty good place. For me, at this point, there's no risk. Even if it got all the way out here to 515, let's say it took 2 more days. Boom, boom, 515. You're actually still making a little bit of money, and then you could slap on an entire new calendar. So we're going to keep working this one. I think it's actually going to work its way back down towards 503, 505. And if it gives us some extra time, then by late next week, we have the ability to take some profits or even just ride it through one more time. So, yeah, absolutely. Okay. Okay. Um, Sorry, I just had to make a quick adjustment to a trade, and here we go. All right, now what? So let's go back. But what does the VIX ultimately give us? It gives us possibly a quarter point back to the upside. So we may lose a quarter point here, gain a quarter point there. I think we're going to be kind of in a stall. So then the next question is, what do we see after the stall? A little bit of an upswing. So there we go. Okay. Now, what else? So this is going to stay, I would say 3.5, maybe 3.25. I don't think it's going to go up. What do you guys think? Any counter perspectives? Let me know. What do we have on the economic calendar next week? So the inflation came back okay today, but okay is not enough to reverse things, right? When we look at what we have coming up next week is back to employment. Monday, nothing. Tuesday, what do we have? We have home price index. Prices have been coming back up. We have consumer confidence, expecting it to drop a little bit, which is okay. We need consumer confidence to drop a little bit. We need consumer confidence to drop a little bit and we need consumer confidence to drop a little bit, and we need spending to drop a little bit. And we would like that to happen while income continues to go up. That's all we ask for. Not too much. On Wednesday, we have ADP and job openings. Usually job openings comes on Tuesday. I don't know. They release that one at weird times. So on Monday, we have ADP employment, we have job openings, and we have FOMC decision, which we're not expecting much, but we will be looking at the verbiage that the Fed uses in order to see if they're changing their stance, either hardening or softening the stance. On Thursday, we have jobless claims. On Friday, we have non-farm payrolls. Looks like we are expecting at 250. We again had a positive surprise last time at 303. Remember, anything above 150 is an expanding labor market. Anything above 150, expanding. So that kind of gives you a sense of what we're looking at. Okay. Fed watch, significantly against in May, as it has been. Significantly against, and more so, it's the worst it's been, in June. July, the worst it's been, right? At this point, the earliest we have any hint of probability in favor, and it's barely better than 1-to-1 for a September interest rate cut. So there you go. Yeah, I was really hoping they'd cut them. I'd like to see mortgage rates come down, but what are you going to do? Okay. Let's go look at our watch list. Let's see what's cracking. Does this convince us that anything really, really nice is happening? Apple. Apple is looking a little bearish to me. I want it to be better, right? I want Apple to participate, but it's just not. It just made a lower low. It's struggling to make it's struggling to get back to the old high or even get to the 50-day moving average. Nothing we can do with that. It looks like it's going to roll over. We have earnings, and that might be able to reverse the course, or it might accelerate it. I guess we're going to have to wait and see. AIG, stable-ish. Earnings coming up. AMD, underwater. Earnings coming up. Amazon, struggling. Earnings coming up. So it's not like we got Meta, Apple, and Google, and now we don't have to worry about earnings. We're still well in the middle of earnings season, period. AXP, that looks bullish. That looks bullish, and I'm willing to trade in the financials still. Not all of them, but some of them. I like AXP. I like BAC. I like mainly those two. I don't like Boeing. Boeing is still down. Bank of America, new high. Looks good. As long as it pulls back and gives me a higher low above the 50, I'm going to consider it viable. Citigroup. Looks okay. Not as good as the others because it's the same high. It didn't get to a higher high. It got to a same high. Caterpillar. Caterpillar is gapped down on earnings and is a little bit of a dead cat bounce, right? A little bit of a dead cat bounce coming back up. So, yeah. Chipotle moving nearer and nearer to its 50-to-1 split, but it's really hard to trade right now. Capital One I like. That's the third one. I knew there was a third one. AXP, BAC, COF. I like those three. I'd be willing to trade those bullishly. I like oil still. I'm in oil. I'm in oil back here, and it's just not really doing much. Now, here's the deal. Implied volatility was higher, so time's on my side. So this is okay. I got to tell you, I would be willing to let it stop me out if it meant oil was dropping. I would rather have that. Costco sideways. Delta still bullish, but not really tradable right now. The Dow underwater. I don't see defensiveness here, but I do see defensiveness in the sectors, right? As we said, we think it may drop to neutral because I have seen a bit of a surge in staples and in consumer, in consumer staples and in utilities. GBTC still looks like it's meandering down. GE, I'm willing to trade this. I like this stock out of the stock split. It wasn't really a split. It was more of a stock dividend. I don't know what they call it. Broke into three places, and this is one of them, and I like it. I'd be willing to trade this on a pullback. Gold. Even though materials have pulled back, gold and silver still look pretty strong. Google. Look at Google smashing the earnings out of the water. Good stuff. Nothing tradable though. Small caps underwater. Not more so than anything else though. So I don't see that as like adding any weakness to the mix. Meta gap down, pulling up a little bit. Still looks weak. Microsoft gapped down on Meta's earnings, then gapped back up on their own earnings, and they're just kind of stalling right at the 50. That's a hard one to know what to do with. Micron looks fairly bullish if there's any chip stocks hanging on, but I don't know if this thing like starts to like roll over underneath 120. That's one that I definitely think, you know what, if the whole tech sector drops, I think this thing could fill this gap and you're back at 100. Well, if it gets up to 120 and it drops to 100, that's a bunch of opportunity for us. Right? We should be interested. Netflix. Nah. Several of these big ones have gapped down and looked to be to some extent in distress. Nvidia, it's back above its 50-day, but I don't know. That's a tough one. So it's hard to want to bet against an Nvidia when you see how strong it's been, right? PCAR underwater, close to earnings. QQQ underwater. You know, we have a different look and feel right now than we've seen in quite a while. When was the last time we saw the market look like this? Well, let's go take a peek. Let's go back the last time that it got under the 50. Here it got back above, but actually it wasn't as bad as I thought it was from here to here. 344 from 386. Yeah. Doesn't look great. SPY. So if you look at today, we gapped up and then we ran up a little bit and then we sat, pulled back, sat, went up a little bit, pulled back, sat, up a little bit, pulled back. So we've been at this level where we are right now since 30 minutes in this morning. So we got a little bit of a surge for the first 30 minutes, and then after that, nothing. Nothing. So what do I think? I think that our concern that this looks similar to this, right? It got back above the 50, even a little higher still on this one, then a little higher, and then, oh gosh. And from here to here, 453 to 421, 32 points, 6%. And then again here. So when you drop 10, we drop 5, up 3, drop 6, up 2, drop 5, and that was it. And at the end of all that, it was 10, but it gave 3 windows, of which 2 more would still happen, even on a correction. And that's where we see ourselves now. TSM, that looks iffy. That looks like it's running out of steam underneath this gap. Not good. Not good. Here's the VIX. VIX looks fine. Probably the best thing. This VIX recovery is like, oh man, look at that. It's all the way back to 15. That's why we put the butterfly. That's why we put the calendar on. I have a feeling that calendar is going to go well. I'm excited for it. I think it's moving the way we would want it to. Waste management. Overall, more bullish than not. I don't know. If it pulls back from here and makes a higher low, I'm still open. I'm still into it. Yeah. Why not? Okay. Okay. Where was I? Walmart. Sideways. Materials. As I said, it is it's dropped a good amount, but it is still showing like it might try one more time, right? To do something. Oh, hey, good to see you, Steven. No problem. Can I take a look at RTX? Definitely our SPY trade is up. Yeah, SPY trade's looking good. SPY trade is looking good. Well, as I said, I'm not going to put out alerts that don't make sense. RTX, I'm still bullish on industrials, and this is part of the industrial defense complex, I guess you would say. It looks like it's riding along at resistance. If I was in it, I would be thinking maybe I want to take some profits, especially if time's working against me. If I wasn't in it, I'd probably wait and see if it's going to give me a minor pullback and maybe get back towards like 97 near that green moving average, right? It just had earnings. It survived. It did better than expected, but you know, it's just kind of grinding along. I still think it's viable. Yeah. Where were we? The XLs. XLC, communication services. Ooh, it's a little iffy there. Google looks great. Meta looks terrible. So we're not quite sure what to make of that. Energy still looks bullish. Financials, I think, still looks bullish. Industrial still looks bullish. Technology, not as much. Staples, resurging with some bullishness. Utilities, same thing. Look at that. These are our defensives. We're like, oh, there's nothing defensive here. Boom. All of a sudden, you're like, whoa, wait a second. I think there is something defensive here. This is healthcare. Healthcare is underwater. This is what do we have here? This is consumer discretionary. Yeah, right. When you look at discretionary, when you look at technology, and you look at communication services, those three are really struggling. Are they struggling like they've reversed and now things look terrible? No, they're struggling like They're in a consolidation of some kind. So, okay. Okay. The trading plan. This week, we are working here. Personal info. I want you to focus here in weaknesses, here in mission statement. Commitment and discipline. Write down something that helps you to organize your thoughts on them. Vision statement. Write a colorful explanation or description of your life if you're trading well. But these two are this one is an organization of what's important to us, objectives, core values, and beliefs. This one is what are we going to try to fix in ourselves over the next couple of months. So this is important. If you're gonna set goals, this has to be a part. This is gonna help you to pinpoint weaknesses and find things that make that are a little bit different. You have to be a little more creative. Okay, great. We can do that. You only have 2 days to get that work in. And like I said, I am going to come in this afternoon here in the next hour or so. I'm going to come over here to the trading plan discussions. Where did it go? Here's the trading plan discussions. I'm going to post it's just a paragraph. I'm going to post my mission statement, and then I'm going to identify the 2 weaknesses that I am looking to address. How am I going to address those weaknesses? Why do I want to do that now? Because right now, as I put these things on paper, my thought is, what can I do to start priming my thought process, to be thinking about these things before I get to the point that I actually have to take some action. So when it comes time to setting goals about these weaknesses, I don't want to be like, oh yeah, I had identified these weaknesses 7 weeks ago. Let's go. I want to be thinking about them now and thinking, what can I do? Right? What can I do to give myself the ability to better prepare and be ready to make those adjustments? All right. What else? We did our watch list. Questions, comments, or concerns? Did I address your RTX question sufficiently? Greg, let me know if you still have a question. Do you feel like I'm missing something? What kinds of trades are you carrying? What kinds of trades are you looking for? Those are the questions. So good, awesome. Are you in it or looking to get in it or waiting for a pullback before getting in it? Where do you guys find yourselves willing to trade? Like I said, for me right now, I really like financials quite a bit, but and a couple of other things, but not a lot right now, right? Not a lot. So, all right. Reducing open trades, that makes sense. Tightening stops makes sense. If you're carrying a number of bullish trades, then with the VIX back at 15, a hedge makes sense, right? Let me see what that hedge is trading at now, if I can. Oh, I lost it. I believe I said it was around 483. $1.69. Right now, we've seen that hedge when the VIX is at like 12%. It's like $1.20. Right? It's like $1.20. Right now, we're at like $1.68. $1.68. When it gets up into the 22, 23%, 25%, it's like $3-4. So $1.68 for a hedge, not a bad thought. So if you are carrying a number of trades or more than you think you necessarily want to, I would definitely be thinking about a potential for a hedge. Our schedule. So on Sunday, I'm going to try to make Sunday the last Zoom day. We're going to meet for a hedge trade in addition to the SPY. The SPY is more of a sideways trade. A hedge trade would be if you're carrying some bulls and you want to have a little protection moving into early next week. Okay, we're meeting Sunday, 11 a.m. Eastern. Join me on Discord, but just in case, I will go do a quick sweep of Zoom. And if anyone's in there, see if I can't migrate them over. And if so, I'll shut her down. But yeah, Sunday, 11 o'clock. Remember that on Tuesday, we have our final options, a little bit more on the Greeks, a little bit of a working session, and then we're going to move forward. May should be great. I'm excited for May. I think May's going to be a lot of fun. So, all right. Well, listen, everybody. Amazing. I don't know where everyone was today. I know Press is camping. He's at Joshua Tree. I hope he's not getting rained on because I've had rain and hail the last couple of days. So I guess we'll see. Yeah. Okay. Thanks, everybody. It's good to see you. Have a great weekend. Enjoy your Friday night. Enjoy your Saturday. I'll see everybody on Sunday. And we will talk soon. As always, happy trading.